Tom, it just brings me back to you, the idea that how much of what we're seeing, maybe even a little bit today, is there's been such a regulatory overhang on a lot of these names under the current administration. Now you have a new FTC chairperson. Is that playing a role in any respect to this? Because Dan Ives put out a note today, said Christmas comes early with the new head of the FTC for tech.
It's probably the best way to sort of measure this is what Bitcoin's doing, because Bitcoin faced enormous regulatory burdens over the last few years, and now we have a White House that's embracing digital assets, a new SEC chairman, FTC chairman, a new Commerce Secretary. I think these are actually being viewed as pro-business, reviving animal spirits, but I think a good proxy is watching Bitcoin.
All right, now I'm going to have to pin you to a target again on Bitcoin, because, I mean, you've been among the most optimistic and outspoken about it for years, to be quite honest. So here we are, above 100,000. What's a legit target for 2025 for Bitcoin?
We think it's going to follow a similar halving cycle that we've seen in the past. That would imply something around 250,000 for Bitcoin in 2025. And on top of that, we have a Trump put, because Bitcoin is potentially a strategic reserve asset for the U.S. government.
In a whirlwind of unprecedented financial excitement, the stock market is buzzing with groundbreaking news that has captivated investors and analysts alike: the approval of the Bitcoin spot ETFs in the United States. This landmark decision represents a pivotal moment in the ever-evolving cryptocurrency narrative, thrusting Bitcoin and other leading digital currencies into staggering new heights of valuation and interest. With entities like MicroStrategy paving the way as the first Bitcoin holding company to grace the ranks of the prestigious NASDAQ 100, the landscape of conventional finance is rapidly transforming. As the world watches with bated breath, key players such as Solana, Binance's BNB token, and the emerging sensation PEPE are following suit, each reaching their own monumental all-time highs. Yet, what lies ahead in this expansive world of digital assets? How will these developments shape, mold, and redefine investment strategies in the near and distant future? Welcome back to Investocracy Crypto.
Let's welcome in Tom Lee now, FundStrat's head of research and a CNBC contributor, with us, as you see, at Post 9. Welcome. It's good to see you.
Great to see you.
Let's hit tech first. Should we be surprised at this resurgence, this melt-up? And it's maybe caught some people by surprise.
I think investors should realize 2024 has been a year of surprising strength. The market has avoided so many opportunities for weakness, and now we're entering the final weeks of the year where we know there's still $7 trillion of cash on the sidelines and quite good visibility in next year. So I think stocks should finish very strong.
Why do you think money is going to the mega caps now in the manner that it is? Up 1.75% today, the NASDAQ up almost 4% over a month, and able to achieve this milestone.
One reason is mega caps have been leading. So it's sort of what people reach into the shelf when they're risk on. But second, we know that when interest rates fall, the mega caps actually are very sensitive to that. And I think today was a day where the odds of a December cut increased. You know, the probabilities are now solidified, and that's actually bullish for tech.
Imagine a financial world where mentioning Bitcoin no longer raises eyebrows of skepticism, but rather nods of understanding and agreement. Fast forward to the year 2024, a year that has firmly cemented Bitcoin's unshakable place in the investment universe by soaring to a record high of $108,268 on December 17th, representing a jaw-dropping 145% increase year-to-date. The euphoria within the crypto market isn't limited just to Bitcoin. Ethereum, now immortalized and legitimized in the form of an ETF, took center stage alongside Bitcoin on the global financial platform, while Tether's USDT stablecoin experienced an astronomical market valuation increase of $50 billion, crossing the $140 billion threshold. It seems like these cryptocurrencies are less digital currencies and more akin to rocket ships, blasting off into new dimensions of valuation previously thought impossible. Solana, BNB, and fresh-faced PEPE, undeterred and undaunted, each basked in their moments under the spotlight, setting unprecedented records and further amplifying the soaring market enthusiasm. Meanwhile, MicroStrategy, often humorously dubbed the whale of the NASDAQ, caused ripples across the investment sphere by becoming the first Bitcoin-centric company to secure a spot within the NASDAQ 100. When it comes to riding the Bitcoin wave, few do it with the confidence and audacity of MicroStrategy. Their plan is nothing short of ambitious, devising a strategy to raise a colossal $42 billion over the next 3 years to further stockpile Bitcoin through strategic at-the-market stock sales and convertible debt issues. It's a testament to their unwavering faith in Bitcoin's intrinsic value and the broader promise of cryptocurrencies.
Because the CPI was, some would say sticky, but it was largely in line. Is that how you read it?
Yeah, that's right. And I think it's allowing, the CPI print today allows people to imagine a path to 2% because shelter now is cooling to a level that's in line. Auto insurance, which was at 25% earlier this year, year over year, is now down to 13%. So the two biggest contributors to CPI are in a downshift. I don't think the fact that used cars are going up is going to reverse the Fed's view. I don't think the Fed's going to tighten because used car prices are up.
All right, so Fed's cutting next week. That's your base case?
Yes.
And then what happens after that? All bets are off? Wait and see? What do you think?
I think the Fed put remains in play because neutral is, let's say, 2.5% to 3%. We're at 4.5 after the December cut. So we know the Fed's in a cutting cycle. I actually think the best case is for the Fed to do the fewest number of cuts next year.
That means the economy is pretty strong.
That's right. It's strong. They're not harming the economy by keeping rates here. And the labor market is holding up, and now we have a lot of firepower for future cuts, which support stocks.
Okay, you talk about a Fed put. You also talk about another put, and that's a Trump put.
Yes.
He's going to be here tomorrow, by the way, ringing the opening bell. People are excited about that down here for sure. But you say that that is a substantial part of your outlook for the new year. The Trump put, explain.
The Trump put is, on the simplest level, it is a White House that is going to measure its success by how the stock market performs. But it's also a president that's coming into a second term, but with a lot of previous experience. So this is a cabinet that has good private sector acceptance, and I think very markets friendly. Overall, I think investors who might have been cautious for the last few years now want to be risk on next year.
As our gaze shifts to 2025, the horizon is painted with undeniably vibrant strokes of optimism. In the esoteric world of Bitcoin, valuations and predictions, where numerical forecasts often resemble whimsical daydreams, some projections stand out for their audacity and conviction. Take, for instance, Fundstrat's Tom Lee, whose bullish stance envisions Bitcoin potentially reaching a mind-boggling $250,000 in 2025. Central to these optimistic forecasts is the Bitcoin halving price cycle, a phenomenon trusted by seasoned Bitcoin enthusiasts anticipated to further fuel Bitcoin's ascent, typically inducing bullish trends in its aftermath. In a bold move to quell lingering doubts and reassure skeptics, Bitwise, the reputable ETF producer, has suggested that 2025 could herald a golden age for cryptocurrencies. Their forecasts hint at even loftier heights, projecting that Bitcoin could trade above $200,000, marking a period where the lines between digital finance and traditional markets blur, blend, and integrate to an even greater degree. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
So your outlook to me is interesting, the way you sort of game out where the S&P can go. Because you say we're going to 7,000 by mid-year, which sounds amazing because most targets that I've seen are 7,000 at the top end for the entire year. Your full year forecast, though, is 6,600. Why?
Part of it's cyclical. We're coming off two back-to-back 20% years, and there are 5 precedents to look at. 5 of the 5 precedents since 1880 had a weaker second half. So I'd say that's the base case. The reason I think markets do better in the first half is that there is going to be a lot of enthusiasm about a new White House, some of the headlines that come, whether it's deregulation, et cetera. And we know there's still a ton of cash and a lot of low leverage on the sidelines. That's why stocks can rally. And by the way, 11% in a few months, we've seen that routinely the last couple of years. But in the second half, I think markets start to worry about the larger macro risks like the Middle East, the potential risks of tariff and executing that, and potentially the fact that Doge could be so successful that it could slow the economy.
You're worried about being too efficient, cutting too much, and what the impact is going to be?
Yes.
As we close our discussion on this exhilarating chapter of cryptocurrency history, it's impossible to overlook the myriad of promises that Bitcoin and its digital cohorts hold for the future. The audacious and strategic maneuver by MicroStrategy into the NASDAQ 100 exemplifies the growing mainstream acceptance and incorporation of cryptocurrencies into the established realms of finance. Contemplating Bitcoin's prospective trajectory, considering its current momentum and the range of expert predictions circulating in the financial ecosystem, it seems poised for an era of unprecedented growth, with potential values reaching up to a staggering $250,000 by the year 2025. If there ever has been a time filled with compelling reasons to consider venturing into the expansive world of cryptocurrencies, it is unequivocally now. The market, invigorated and set ablaze by these recent developments, offers not just a fleeting spark of speculative intrigue, but a beacon pointing toward vast, uncharted financial landscapes waiting to be explored. So, what are your thoughts on this evolving financial narrative? Is Bitcoin on its way to becoming the definitive digital gold of tomorrow? Or could it be another volatile mirage casting illusions on the investment landscape? Share your insights, your doubts, your hopes, and let us engage collectively as the conversation merely begins.